Okay, we've got good news, and it hasn't been in the media that much. Did you know that interest rates went down with most of the large four banks, and we've got the best mortgage broker in town, Zach, here to tell us more. Stay tuned.
Morning, gents.
What? Rates went down.
I know. It's good news. Zach, tell us more. The deliverer of good news to the people, for the people.
Few and far between. They've gone down. The majors have dropped them. Very unusual, but it proves that variables are variables.
So is this going to last?
More importantly, but before we get into obviously this is super important. These interest rates. Even more important is you've had a groom. You've cut your long hair. I've just realised now, and you've cut off your beard. What happened?
Fight with the lawnmower, Mark. Lost it.
Was it what inspired you to do this?
Coming into the warmer season, it was the sunshine. I thought I'd get some sun on my face, then hide behind the hair.
And you had a big ponytail.
No longer.
You got rid of that as well.
Sharp. Looks very sharp.
I've got to keep up with you boys.
And what are the girls saying about it?
Oh, my girl likes it. She's supportive.
But what about all the rest of the girls in the country that follow you?
I'm gonna have to reach out and ask my followers then.
Yeah,
they haven't been saying too much about it, but sure after this they will.
They will. Now, Zach, you have shocked me this morning talking about interest rates going down. We haven't seen it or heard about it in the media. It's truly a significant rate reduction. It wouldn't have been over the last couple of years, but in hindsight of rates going up, this is the first time that the banks have made a decision to put them down independent of the RBA. Why would they leave money on the table? Why have banks done that, in your opinion?
Yeah, no, that's right. It is the first time in this cycle that we've seen it. ANZ, CBA, NAB just this morning. I think as they get a bit more of a realistic outlook towards the peak of the cash rate, things might stabilise. Not to say that there's not going to be further increases, but I think in the very early stages and to date, there's been a lot of knee-jerk reactions, bumping rates up intermittently and in line with the RBA. A lot of people are seeing maybe where the peak of the cash rate lands, so it might not be as dire as what the banks forecasted, so they can alleviate some of the issues that some of their purchasers or some of their customers have been complaining about.
And so just for people who don't know, the Reserve Bank of Australia has made decisions almost every month in the last 3 months, 6 months to review and sometimes put up interest rates. But banks still have the autonomy to move their own rates up or down depending on how they feel at the time as well. So I guess economically, the RBA will make their moves on interest rates, and then commercially, banks will make their moves on interest rates.
Well, I think right? Banks were the first to do it. The banks rates went up before the RBA started its tightening cycle. So that put pressure on the RBA to, not lead but respond. And so then they'd gotten ahead of where everyone expected and started lifting rates at the start of this year rather than next year. But I suppose in that, the peak comes sooner. So what we've seen from where we're looking is March to May next year is a lot of opinions that are coming around saying that's going to be the peak. So the pain's not over, but it doesn't look like it's that painful at this point in time. I know before this call we were having a brief chat. We'd seen some data as well on consumer spending not yet being impacted not yet coming off by the current rate situation. So people are still out there, still busy.
Zach, I got a question for you. Why would they be doing this though? And it kind of ties into where Luke's going with this. Do you think they've maybe dropped it 20 basis points just to get people to fix now, or do you think you're going to see people start to, increase the amount of fixed loans you'll see, and then it will push back up a little bit more, or what's the deal?
I don't think we'll see a change in what people going fixed or variable. We're still doing a lot of variable loans at the moment because they're the most competitive rates. The lowest we've got is about 3.29, and the best 2-year fixed is about 5.6. So you can see the difference is still 2.5% or thereabouts. I mean, it's up to your opinion if you want to hedge that for the next 2 years with the opinion that the cash rate will peak in less than a year. So, not to say that it's not going to stay up there for a while. Historically, the RBA has held at the peak of the cash rate in previous tightening cycles for 6 to 12 months. So it might come back a little bit following the middle of next year, but it'll still be up there. So it might be a good hedge, but variables are still 2.5% cheaper at this point in time.
Good to know.
Wouldn't I guess if you're looking over the last 10, 20, 30 years, or people that haven't gotten a mortgage yet, wouldn't you regard these interest rate rises as quite mild, or net effect of where we are? And how are people responding to this? Are your customers like gutted, or are they like, yeah, whatever, we expected it?
It's a mixed bag, and I mean everyone's in a bit of a different scenario. However, I think you've touched on a couple of times, Mark, the capital growth in properties that's happened through COVID. And while some of that has cooled off, I guess what we're still seeing a lot of is people making the most of their borrowing capacity. And by that, I mean, as rates go up, borrowing capacity comes in. So you lose borrowing capacity, the more expensive money is at the banks. So at the moment, people are choosing to use, some equity that they've built up in the last 2 years. It was an aggressive equity hike in the value of properties that saw a lot of people come out on top. They're actually pulling that equity out and using that to purchase other properties and other assets. So we're doing refinances, equity releases for investment purposes, and we are seeing investors, jumping into the market with a bigger share of property purchases at the moment.
So when you say bigger share, are you finding that people are buying an investment property rather than putting that money into owner occupied because they're getting the benefit of a rental return? Or is it just doing what it's always doing, or are you seeing that more?
I think you could probably give us some more realistic dialogue on that with the opens on the weekend. But I think as the market has sort of cooled off a little bit, people with cash are looking for that next investment. What do you think? I went to a couple of your opens on the weekend, and they were all busy. There was a lot of people at every single one of them.
That's how we roll Novak. Yeah, all the other agents in Australia, they were quiet, but Novak Properties opens, they were very busy. Zach?
Market leader.
Billy, what do you reckon?
I think the majority of the people I was talking to were looking to move into it, funny enough. Yeah, I guess it does range on the style of property you're showing. But we were showing everything from an entry level 1-bedroom apartment just shy of $600,000 up to a beautiful family home guiding 2.7. So it was a lot of conversation. But the general buyer I had coming through seems to be moving into the place they were looking at.
Yeah, interesting. Hey Zach, I noticed on you, like Shaw, what do you call yourself? Shaw brokers. Shaw Finance. I always get mixed with the ones in the football, the other Shaw ones.
The sponsors of the Manly Seagulls.
Yeah, I always get those guys confused. You guys have some incredible, your social media, your LinkedIn, everything is just incredible. It's the best in the business, in my opinion. What have you noticed from what you guys are seeing on socials that people are responding to a lot? So, for instance, I looked at one of your charts the other day, which showed the ability to lend 6 months ago, as opposed to the ability to, or a year ago, as opposed to the ability to lend now. You just can't borrow as much as you used to borrow. It was really charted, really cleverly the way you did it. What's the word on the street?
I think people just want to know. Like, as you said, there's a lot that doesn't get reported in the media, and everyone's, I guess, traditionally looking to the TV. But now there's that much information on social media, and you can get it from the horse's mouth, so to speak. So, we're reporting data from what we're seeing at banks, from what we're seeing at the RBA, and it's our sort of take on what it is, and we're at the coalface representing the clients and seeing what the best deal we can get for them is. So I think people like the facts, they like the figures, and they want to know what people are thinking in terms of where it's going. Whilst you can't really put your finger on it, at least there's some more consistent chatter on our socials in terms of what's impacting our clients.
I think easy numbers are really hard to get a hold of. There's always a lot of words and a lot of like analysis on where rates are going, what they're doing, even like a small graph, and then they've got a whole page on breaking it down. But the simple numbers are hard to get a hold of, and you guys do that really well.
We do love a good graph. It's the best visual representation.
Hang on. You said graph, and you said graph.
Graph.
Mark loves this one.
I'm going with Zach on this one. I'm going with Zach. It's graph.
Oh, you haven't sided with the proper English in the room.
Nah, we're in D1, mate.
Well, I've been highlighted with you got a majority vote there.
Question: do banks want fixed loans at high rates? What do the banks want?
What do the banks want? Unfortunately, I'm not a bank, but I mean, the banks want money out the door. They want to be making money on the money that goes out the door. So I mean, the higher rate, if they didn't want the fixed rates, they wouldn't be available. But they are there because people still do go for them, because they do want to hedge. They the security of not having to figure out the payment. They want something solid for a certain period of time that they're going to have the loan. But I'm not seeing a lot of it. Variables all the way at the moment.
All the way. But great question. Thanks, Luke. But I personally think that it's the banks are a bit like the casino. The house always wins. So I think the amount of smarts that are within these banks and the areas that they're educated in, highly educated in, if it's a guessing competition, they're the ones that are going to win when it comes to fixed rates. So do you want to guess a bank against them? Bet against them, they're always going to win.
They are, and they do have the brains.
Yep. All right. So, anything else you want to talk about today's show? Is that a take?
Well, how did you guys see the weekend?
Mark?
Busy.
Yeah. And I think another thing I want to point out before we leave this morning is I'm so surprised this hasn't been talked about more, because the first...
Zach's, yeah, I know, because I really like the ponytail.
No, I was talking about the first rate increase, Zach, was obviously blown up in the media. Why is no one talking about almost half a rate increase drop? It's strange. Or is that just because it hasn't hit the news yet?
Well, I only got an email from NAB this morning at 7:00. So yeah, could still be fresh off the block. But yeah, last week, a few of the other majors did go down. I mean, the medium just may well have not reported it yet. So we'll see what happens.
And did you see this coming as the person that's across everything? Did you see it coming, or is it kind of caught you by surprise?
Look, we did see some of it coming because looking at other metrics that forecast the cash rate and how it affects other parts of the economy, people were already pricing in a cash rate peak and with more solidarity. So I guess historically, when people start to see other indicators in other areas, then things sort of trickle on and come back into our world. So yeah, I mean, look, as a broker, it's my first time in a rate tightening cycle as a broker. So I guess I've only had to look at in the past, but it wasn't completely out of the blue. You know, they might still have a bit of a way to go up, but they're not going to go up forever.
There you go.
David has got a question. Sydney property a little. What he's saying. He's heard that Sydney's property prices have dropped a little bit. What do you reckon they've dropped, boys?
I think they've come off, but we found a new level now. I think in recent weeks, no longer. So probably, you know what? I think COVID's a really good measure. And let me give you. I do love a graph. Can I show a graph? Go.
This is a good answer to the question, and I will be using DY because we love DY. That's what the market's done.
Love that.
So are we still ahead of pre-pandemic levels? We're still up.
But yeah, that's 3 years. Yeah, that's 3 years. So we're still ahead.
Yeah.
Doesn't feel like it, but we are. We're still way ahead. But if you look at like 1 year, for instance, rubbish.
Yeah, right.
Yeah, right.
People get used to the high, and it was such a high, right?
Well, such a high. I just think it's time just to, we'll just monitor inflation, head down, bum up, work hard, and just get through it.
Yeah.
We will do.
Signing off. Thanks for joining us again, Zach.
Signing off. We're running a vote on Zach's ponytail. If you want to back ladies, just send us a message and we'll run a vote and let Zach know.
It can only grow back.
Yeah. I you know why I always talk about it? Because I always wanted to do it. I always wanted to pump the beard harder, Viking style, and then do one like a little man bun at the back.
Give Mark some love, ladies. He needs it. Get the ponytail on Mr. Novak.
Zach, how can we get some info out to these guys that are watching on what we've talked about this morning?
Pardon me? Say that again, mate.
How can we get some info out to the guys that have watched this morning about what we've talked about?
Well,
do you have any?
This link's going live. My LinkedIn has plenty of graphs, whichever way you look at it. They all say the same thing, whichever way you look. shorefinancial.com.au. We've got a blog. There's plenty of information there.
Yeah, perfect.
We'll whack the link of this story up onto the Novak LinkedIn, and Zach will put it on his LinkedIn as well for people watching today.
Beautiful.
Nice one.
Cheers, guys.
Bye, guys. Have a great day. Have a great week. It looks like it's enough to be a corker. See ya.
Catch up.